Marina here from Sage Investors, and I'm here to do a quick mind map analysis of my most recent investment decision, which was to buy shares in Square Incorporated, ticker symbol SQ. This video can also be available in podcast format. You can download it through my website, sageinvestors.ca, or through Apple Podcasts. So every time I'm looking at a stock, there's a bit of a process. I always ask myself a series of questions, and once I usually answer these questions, I have a pretty good idea whether I want to buy or sell the stock or avoid the stock altogether. And what I want to share with you is just basically my thought process of how I went about making my decision to buy Square by answering these basically what I think are core fundamental questions. And these are questions that I work with students on, and students that I teach investing to, how to ask these questions, how to answer these questions, so that they can build a bit of a framework and a bit of a rhythm and an iterative process in terms of framing their investment decisions. So let's take a look at Square in the context of these questions. So the first question I always ask myself is, when I'm looking at a company, when I'm looking at a stock, is what do they do? What is their value proposition? What do they sell? What products and services do they sell? And what makes them unique compared to other potentially similar type businesses out there? So when we look at Square, Square is essentially, let me just get the thing set up here. Square is essentially a online payment service. They have created some hardware that you can plug into your, which is literally a Square device, which you can plug into your smartphone or your tablet, that can allow you to swipe a credit card and take that payment of a customer and transfer it to your bank account and process that payment. And they develop some hardware and some software around it. And what it does is it allows essentially anybody, and this is the value proposition, it allows anybody to essentially become a full-fledged business, from an entrepreneur, from a solopreneur, from somebody working in the trades, in a service-oriented business, to be able to facilitate multiple styles of payment. They don't have to take cash anymore. They can take a credit card, they can take a debit card, and literally process it on their smartphone or on their tablet or whatever device that they're using. It allows them, a small company, to become literally a bigger company and perceive themselves to be a bigger company. What they've done, and that was how Square initially started, but they've kind of evolved quite a bit into developing some various different kinds of online payment ecosystems. They are more focused now on, they've developed a suite of tools, of online tools that deal with payments, but also dealing with installment payments, processing installments, lending, and now even they're getting into payroll. There's a Square payroll product out there. That's one ecosystem that they're payment system they're developing. Another one they're developing is a much more consumer oriented one, and it's called the Cash App. And it's similar in the nature of, like, if you look at Tencent, they have the WeChat, WePay, in the sense that you have banks that you can send email, interact transfers. They've developed their own set of tool, and what's unique about them is you can transfer money. You can transfer money, but you can also transfer Bitcoin, and we'll talk about that in a little bit better. It's a very popular app. It's actually one of their apps. It's one of the top 20 most downloaded apps. If you go in the Apple Store, Apple App Store, it's an extremely popular app, and I'll get into some of the numbers a little bit behind it. So that's what they do. They're an online payment processing organization. Who do they compete with? Next question I asked, who do they compete with? Well, there's really two forms of it. They either compete with the traditional form, traditional branch institution, online, traditional payment processing institution, which would obviously be your banks and your credit card companies, your Visas, MasterCards. Now, then there's also a lot of other online payment services. There's the PayPal. Apple Pay obviously is in play. Google Pay. I talked about the Tencent approach, which is quite popular outside North America. And then there's crypto. So it's a very, very dominant, very, very competitive marketplace for online payments. There's various avenues you have to process payments, to send payments now. Becoming a cashless society is very much in play. So who would use something like Square? That would be the next question I'd ask. Well, as I've kind of alluded to, small businesses, solopreneurs, people like basically in the service trade. So you'd have like plumbers, repair people, individual contractors, vendors in that sense. This would be something that would be the Square service would really be something that they would be able to tap into. And the question is, would they continue to use it? Well, I think the nature of it, and this is when we talk about this is about ecosystems. And so the goal really for a company like Square is to get these people into their ecosystem, and once they get into that ecosystem, the chances are the propensity for them to stay in that ecosystem is probably going to be pretty high. So there's a pretty good chance for them to stick around. Okay, so we know what they do. We know who their competitors are. It's a very competitive space, and they appeal to, and we know kind of have a little bit of an idea of who their customers are. So we have a little bit of idea what the business roughly is, or rough around sense is. So the next question we have to ask ourselves, well, that's all great. It seems really interesting and appealing, but do they make money? Does this company create tangible wealth? As investors, we want to invest in businesses that have an ability to demonstrate that they can create tangible wealth. So when I'm looking at measuring a company's financial performance, I like to focus on a metric called economic profit, which is essentially taking the company's return on invested capital and subtracting the company's cost of capital. If they have a positive value, that represents that they're creating positive economic profit, which means they're creating tangible wealth for their shareholders. And ultimately, if you look through history, stock markets will reward companies that can demonstrate that they can create positive economic profit over time. So when we looked at Square, their return on invested capital over the last couple of years has come in between -4 and -5% versus their cost of capital, which comes in around 9%. So from this basic metric, it doesn't look like this company is creating any tangible wealth. But then I said, you know what, I got to look at some of the numbers. Let's drill down some of the numbers and just really see what's going on with it. It's a fairly new business. This is a company that's been growing basically 40% per year over the last 5 years. It's got margins, operating margins of about 40%. 40% gross margins. So a lot of that money is getting sucked away somewhere. And one place that's gotten sucked away is another side business, which I didn't talk about, which is an area that they get into, which is called the whole fast delivery space. They owned a company called Caviar, and so which is the equivalent of Uber Eats, which is a delivery service, online delivery, food delivery service. They pumped a lot of money, and it sucks a lot of cash flow. It has been sucking a lot of cash flow, and I think it's been playing a factor into a lot why their economic profit has been doing. Company, and this is really one of the reasons why I got kind of interested in the company, is they recently just sold the whole Caviar for $400 million. This was a loss, negative profit, losing money sucking, cash flow sucking part of their operation, which was very popular, but it was just they were bleeding money off of it, and they sold it. They managed to get $400 million for it. So from that perspective, I'm thinking if by pocketing the $400 million, that $400 million capital, I think this is going to be a positive cash flow transaction. I think this is a company that's going to be able to increase its cash flow significantly in the future, which ultimately is going to probably play into, I think, their return on invested capital. I think this equation is probably going to change, and it might be change. I think it'll change for the better. So drilling down also, I drilled down a little bit to understand some of the numbers behind their business. And if you looked at their Cash App application, which I talked about, their Cash App, they did 260 million in the last quarter, which is almost half their business. Their Bitcoin, and if you looked at the numbers of those 260 million that the Cash App did, 125 million was in Bitcoin, which is astounding. Like, as I said, Bitcoin is brand spanking new. This is a new concept, this cryptocurrency concept. Square is doing about 125 million already in business in Bitcoin, which is pretty crazy. And a lot of time, it represents almost 20% of the revenues is now coming through Bitcoin transactions. So a lot of people are really skeptical about cryptocurrencies, but if you look into the numbers here at Square, they're actually there's tangible monetization going on here with Bitcoin. So pretty impressive. And there's a lot of forecasts that really this Cash App is going to be a significant driver of this company's revenues going forward. So looking at the surface, the returns on invested capital look pretty lousy, but when I go a little bit under the surface, I'm looking at a company with a very high gross margin, so it's a very profitable operating business that unfortunately was getting sucked dry because of this other types of businesses that were sucking cash flow on it. But it appears to have a product that is quite popular and is quite generating, and there's a lot of growth potential behind this. And the fact that they're getting into the Bitcoin side of it and actually monetizing it and generating a lot of revenue from it, a significant amount of revenue, it's interesting. It's an interesting thing. It piques my curiosity. Normally, when I look at a company's return or economic profit, and if it's pretty lousy, I'll just shut it down here. I'll just stop my analysis. I don't even go near the stock. But these little under the hood scenes really piqued my curiosity. So I thought, okay, let's keep going. Let's see what else we can learn about the company. Which leads to the next question, which is looking at the company's financial position. How strong is this company financially? Is it going to go out of business tomorrow, or is it going to be long-term durable? Is going to be a long-term durable going concern? So when I'm looking at that, it's basically focusing on the balance sheet. So when I'm looking at the balance sheet, there's three areas I want to focus on. I want to look at the company's liquidity. I want to look at the company's liquidity. And so when I'm looking at the company's current assets, current liabilities. If you look at the company has right now 1.1 billion in cash, which is greater than its long-term debt. So one of the things I always like to look for companies is companies that have more cash than they have debt. And if the company has debt and a lot of cash, then have that ability to retire all that debt, like on a stroke of a pen, that's appealing. That's a sign of a good, strong business. This is a business that, from my perspective, isn't going to go out of business tomorrow. Looking at the company's debt level, their debt equity ratio, which is one I focus on, comes in at about 0.55. So it has a fair amount of debt. It's about, it's got amount for a tech company. Usually tech companies historically don't carry a lot of debt, but we've been in a world with low, uber low interest rates. So more and more companies tech companies are taking on more debt. Finally, the other area, it's manageable. The fact that the company has more than enough cash to retire its debt like instantly, it's okay. I can live with a debt equity of about 0.55. I can live with that. The final area that I want to focus on with the balance sheet is the quality of the company's assets, in terms of the percentage of assets that are goodwill, intangible type assets versus the total amount. So for Square, it's about 10%. They have about 10% goodwill / intangible assets. So it's very manageable, very low. And so it tells me the quality of the company's assets are very high. This is a very financially strong, appears to be a very financially strong business. So that's all nice and good. Seems to be a financially strong company. There's a lot of revenue growth potential here with the company. But then we have to start looking at the other side of the equation. So far, the story looks interesting. But then we have to start looking at the other side of the equation, which is what could take this company down? What are the risks that Square could be facing? So there's quite a few here that make Square a bit. There's a lot of clouds out there that the company has to deal with. So one of them is the fact of the matter is they have a part-time CEO. So it's a governance issue. Jack Dorsey, who is also the chairman of CEO of Twitter, is also the CEO of Square. He has two jobs. He moonlights as the Square CEO. So far, he's got away with it, but reality is he's got to pick one. And from a governance perspective, there needs to be better oversight. So to me, that is a bit of a risk. He's been able to get away with it so far, but um, it's a risk. The other side of it potentially is obviously what the thing is going on right now is all the trade war trash talking. If the trade war starts impacting the economy, the U.S. economy specifically, then there's a potential for revenues to fall. If you looked at Square at its original business model, which was that little Square thing, processing payments, plugging into your smartphone, yeah, this could be a potential risk. But the nature of the company, though, is, as I said, they're really branching out in terms of building out ecosystems, and the whole payment processing ecosystem is one. But then they have this whole consumer-oriented process payment transfer system, which appears to be doing really, really well in just out of the gate. Could potentially, I think, could potentially mitigate mitigate some of that impacts if the economy were to go into a recession. That being said, there's actually a perverse impact that could actually help Square is if people start losing their jobs and becoming unemployed, there's more propensity for people to take on more self-employment. People start operating their own businesses. And so if that's the case, that could really help a company like Square that has built, and it would be an opportunity to get more people into their whole payment processing ecosystem. The other risk is just as we've seen, there's a lot of competition in this space, and so there is a potential that this whole payment processing, online payment processing, could get commoditized. Is there enough there for a company like Square to play in? Is the pie big enough? Is this company big enough? Or is this company might at some point be ripe to be taken over? And I think one of the reasons in terms of mitigating this risk, I think this has been why Square has now sort of pivoted to the consumer side. And I think this whole Cash App concept, I think, is really an attempt to kind of pivot themselves away and have that bigger exposure to the market, to the consumer market, to broaden their moat. So there are risks with this company. You know, it's a really interesting model that they've got going, but there are risks, and there are probably severe risks. And I think part of the reason they're basically risks. So it leads ultimately to the final question they have to ask is: we can do all this work, we've gone through this whole process, this exercise, but at the end of the day, as investors, is this stock cheap? Is this a good stock that we even want to get into right now? Or is this something we may want to wait down the road? So, as I said, one of the reasons I got interested in Square was the stock, which was trading in the 90s, has now gone down to the low 60s. So it's taken quite a hit. If you look at the from a company's relative value if you look at the company's relative valuation. If you look at, like, for example, if you're looking at it from a price to sales, the stock is trading at about 6 times versus the industry, which is trading at about 2 times. So on a relative basis, this is a pretty pricey stock. The psychology on this stock is pretty bad. Is pretty bad, and it's pretty out of favor. There's not really much to like about it on an evaluation basis. It looks pretty expensive on a relative valuation perspective, on a discounted discounted cash flow perspective, it's looking pretty lousy too. But I think the fact of the matter is, because of this Caviar albatross that's been kind of hanging on the company, it's been hard for the company to generate meaningful cash flow and meaningful returns on capital. But I think now, with the Caviar out of the picture, that albatross being removed, there's a potential for the company now to start generating much more meaningful future cash flow, free cash flow. The fact of the matter is, the business model, especially on the Cash App thing, is starting to is very, very cash flow positive. There's a lot of potential here for this stock to at least back up to like another 20-25% upside on it. So when I look at it, you've got a high margin business, very popular tools, strong financial exposure, financially very strong, very high levels of cash versus debt, low goodwill, intangible assets. It's pivoting now to broaden its customer base. It's trying to build these ecosystems that are going to bring in very distinct type of customers. I've put all these things together, and then at the end of the day, it might be big enough. Potentially, this company could get taken over, which could then provide an increased valuation. High margin business, strong balance sheet, now probably improving cash flows, potential takeover candidate, maybe 20 to 25% upside on the stock. When I put all these elements together, it basically, I came up to it, even though there are definite risks associated here, I thought it would be an interesting speculative play. So if you're gonna get it, I was thinking, if I'm gonna get into this is very much a speculative play at this point. There's going to be a lot of volatility around this stock, and you got to be ready for it. So I looked at it, but my take is I invest for the long term. I'm not investing for a couple of weeks. I'm not a day trader. I'm willing to. The fact of the matter is, the company is financially strong, that I think it can evolve and advance and be able to bring itself back to a higher level. So when I factor all in this thing, at the end of the day, it's a speculative play. But at the end of the day, I thought, okay, you know what? This may be an interesting company just to put a little bit of a position on and build it up and see how it does. And so I ended up essentially making the decision to buy. But I bought it also with an exit strategy that if the stock goes down 20%, I'm out, as part of my playbook, as part of my investing ideology. So there you go. That's my decision, my mind map analysis of my decision to buy Square. If you're interested, as I said, this video is available in podcast form. You can get it through my website, Sage Investors, or through Apple Podcasts. If you're interested in checking out any of my other videos that I do, my other mind map videos, or more information about my courses, investing courses that I teach, where I really essentially am applying what I just showed you here. I teach people to basically build this kind of format. If you're interested in that, you can check my website out again, sageinvestors.ca, for more information. This has been my mind map decision to buy Square. Thanks for listening in. My name is Amin Reina of Sage Investors. Thanks a lot, everybody. We'll catch you again another time. Bye-bye.